Welcome back to the Dean's Institute. Today, again, we're excited to teach you how to prepare revaluation account, partner's capital account, and balance sheet in case of a retirement of a partner. This is applicable for 12th Standard Accountancy syllabus anywhere in India or abroad, especially for the Karnataka students. It's called second year pre-university course. So it's the chapter called retirement of a partner. So here, typically we will be given a balance sheet. There'll be some adjustments given, and we are required to prepare these three statements, which we put on the same sheet in order to show if an entry appears over here, where does it appear in the partner's capital account if it does, and where it does if it appears in the balance sheet. Okay, so let's get started. So since the debit side is um, on the left, and we'll start with the debit entries for the revaluation account. Whenever there is a loss or reduction in the value of assets, you will write it on the debit side. If there is an increase in the asset value, or if there is an income or profit, you write it on the credit side of the revaluation account. All right, so let's start with the first entry, which is office furniture. As we can see, office furniture, it has reduced. So just pull out the calculator, write the new value which is given in the adjustments, 14,250, and minus the value given in the balance sheet from it, 18,250. So that's minus 4,000. This sign minus straight away is telling you that the value is reducing. So without atom of doubt, you go ahead and write it on the debit side. So do depreciation, office furniture, 4,000 rupees. And that same entry will reflect over here in the balance sheet when you write office furniture 18,250 minus the 4,000 which we depreciated, and write the depreciated value 14,250. Similarly, do the same thing for land and building. So the land and building value has also depreciated. So it was 26,000, now it is 20,000. So we'll take 20,000 minus 26,000, which was the old value. That is 6,000 rupees, which we will depreciate. And the same thing will reflect over here. Land and building, 26,000 minus 6,000, which is 20,000. Write it in the outer column. And then you total this up, and the 10,000, write it in the outer column. Now, once that's done, we have a provision for doubtful debts, which is 1,700, which is also a loss for the company. We will be writing that. Debtors was 26,700, and 1,700 is the provision for doubtful debt, which we will directly write it on the outer column. So we'll take the calculator, 26,700 minus 1,700. So 25,000 is what we're going to write it in the balance sheet in the outer column. 25,000. Okay. Now let's go back that, and we'll total this up. There's no more entries to debit. So 11,700. Let's come to the credit side of it. Now, as we can see, the stock value is 20,000, whereas it used to be 18,100. So there is an increase. So take the new value, which is 20,000, minus the 18,100, which is the old value. 1,900 is what is the appreciation. So you will write it in the inner column, and similarly in the balance sheet, you will add this value this time. Previously you were reducing. Now in this case, 18,100 plus 1,900 to arrive at the 20,000, which is the new value. Similarly, you will do the same thing for plant and machinery. So let's see where plant and machinery is. It is 23,530, whereas it was 20,230. So let's see how much increase in the value it is. That's 3,300. So again, you're going to write 3,300 here, and again in your balance sheet, you will increase that value and write. We'll take the old value, that is 20,230 plus 3,300, write the new value, which is 23,530. Now, once you're done with this, there are no more additions, so you will add the totals and then you will write the total value. 1,900 plus 3,300 is 5,200. That's the appreciation. Now, there's no more appreciation or no more uh, anything that will add value. So we will come to the balancing figure. So take this 11,700 minus 5,200 is the credit side. So 6,500 is the loss. Now we have to distribute it to the partners based on the old profit sharing ratio. So old profit sharing ratio is 5 is to 3 is to 2. So if you add the totals, 5 plus 3 plus 2, that is 10 shares. So Jane has to pay 5 out of 10, has to pay 5 divided by 10 into 6,500 is the loss. So Jane has to pay 3,250. So we will write Jane's capital inside in the inner column 3,250, and straight away we'll go and write it over here 3,250. We are debiting his account. That means we are reducing his value. Similarly, we do the same thing, 3 by 10 into 6,500, which is 1,950, and Jane has to pay 1,950 from it, and we will debit Jane's partner's capital account. We will debit that amount. And similarly, Malik will get 2 out of 10 he has to pay, which is 1,300. We'll debit his account as well. So now and then you total this up and write the 6,500, the balancing figure, and the total amount 11,700. We finished with the revaluation account. Okay, so now let's come to the partner's capital account. Now, partner's capital account, we will take the capitals first, which is 40,000, 60,000, and 20,000. Okay, so we'll go and write it over here on the credit side. By balance brought down, Jane's capital is 40,000, Gupta is 60,000, and Malik is 20,000. Once we are done with that, as we can see that there is accumulated profit 16,750, which will be distributed to the partners based on the old profit sharing ratio. 5 divided by 10 for Jane, 16,750 into 16,750, which is 8,375 is what Jane will get. So 8,000 accumulated profit, Jane will get 8,375. Do the calculation for Gupta and Malik, you get the answers. In this case, it is 5,025 and Malik will get 3,350. So once that happens, now as you can see, the partners, the goodwill is 9,000 rupees. So Malik's share is 2 out of 10 into 9,000. That is 1,800. This 1,800 has to be paid by Jane's capital, by Jane and Gupta, the remaining partners, the continuing partners. So that we will go and credit Malik by 1125, which Jane has to pay. That's why we'll debit his account 1125, and 675 Gupta has to pay. We'll credit that to Malik's account and we'll debit Gupta's account 675. Okay. So once this is done, now there is another entry given over here that they are willing to pay cash 16,500 to the living partner, which is Malik. So in that case, we will distribute that again based on the new profit sharing ratio. So now the new profit sharing ratio is 3 by 2. So we'll take 3 divided by 5 into 16,500. So Jane has to pay 9,900, which is here. Okay. And 6,600 Gupta will pay. Together, that amount will be debited to Malik's account, 16,500, because he's already been paid. Now, after that, total this up. So, which you will get 58,275, and here 71,625, and Malik's total is 25,150. So, you're finished on the credit side of it. Now, we need the balancing figure. Now, let's take Malik's figure of 25,150 and minus the values he needs to be debited. That is 1,300 and 16,500. He's already got that money. Okay, this 1,300 is the loss which we made in the revaluation. So if you remove both these values, you get 7,350. So it is termed as Malik's loan because Malik is leaving, and that till the time Malik is being paid, it will reflect as a loan in the balance sheet. That's why it will reflect in the balance sheet as Malik's loan, 7,350. Now, same thing, we need to check the balancing figure for Jane's capital and Gupta's capital. Jane's capital is 58,275 over here. So we rate 58,275 minus the values. This is the revaluation loss, and this is the capital which he has to pay to Malik, the uh, the goodwill amount. So we'll reduce both the values. 3,250 minus 1,125, which is 59,300. So 59,300 is the new capital for Jane, which we will write over here. Jane's new capital is 53,900. We'll do the same thing, and now we'll total it because Jane's side is over. We total these three values, you get this value. Now we'll do the same thing to find the new balance capital, capital, Gupta's capital, by taking this 71,625 and minus that from these two values. This is the revaluation loss, and this is the uh, goodwill amount which he has to pay to Malik. So minus 1950 minus 675. So that's the new capital for Gupta, 69,000. So we'll write 69,000, and over here in balance sheet we'll come and complete that 69,000. We'll total these two things to know what's the total capital amount, which is 122,900. Now come and complete this, total this up, and then similarly do it for Malik as well. So with this we finished revaluation account, we finished the partners capital account. Now we are left with balance sheet. In this method, what happens is there are no more adjustments that needs to be made. So now all we have to do is go on to the liability side, the entries which are left out, write that on the liability side, and the entries on the asset side which are left out, you write it on the asset side. Simple as that. We don't need the calculator now. So sundry creditors, there is no adjustment, so we will write the value as it is, 19,800. Straight away we'll go and write on the liability side 19,800. Similarly for telephone bills outstanding is 300, accounts payable is 8,950. And once that's done, we've finished with all the entries, so we can total it up. So the total on the liability side is working out as 159,300. Now once you're done with that, now come to the asset side of it. Bonds, there are no adjustment for bonds in the adjustments, so direct amount you're going to write it in the asset side in the outer column. 14,370, cash 5,500, bills receivable 23,450, and computers is the last value that is left out, so you enter that 13,200, and then total the asset side as well, and which must match the liability side, 159,300. So once that is done, which means your balance sheet is correct, And also it means that your partner's capital account and your revaluation account will also be correct. Okay, any mistake made somewhere, it will reflect over here and the totals will not tally. So this is one way of back testing if you've done the sum correctly. In Karnataka it is for 12 marks, and I suppose in the other state boards also it is between 12 to 14 marks. It's a very important question. Please practice this a few times and you'll master it. I hope you've benefited from this video. If you have, please like, share, and subscribe, and send it to your friends. Uh, make it a viral video by spreading it on Instagram, Facebook, Twitter, LinkedIn, Reddit, or wherever you are connected to. Help us grow our subscriber base, and more students benefit from our teaching. Thank you so much. We will meet in the next video. Bye for now.